And our guest investor today, the man that I like to call the most interesting investor in the world. He is a former Rookie of the Year in the California Horse Racing League. He is a Best in Show recipient or equivalent, whatever you call that, in alpaca farming and displaying. He is a man of many talents, including college volleyball player, ex and pro surfer, and a investor across every asset class that you could possibly imagine. He gave GC the genius concepts that generate cash flow, the great co-host name that we have not stopped repeating since his first appearance. He is Zach Correa. Aloha, Zach. Welcome to the show.
Aloha, hui ho. How's it, GC and PG? Great to be on the show. Thank you for having me back.
I feel like we're talking to the Godfather here, don't you? This is amazing.
I get a little starstruck. I get a little bit starstruck, and I love being here with the community today. They are in the house, and now we're going to go to the Zach Correa. This is your investment live.
Wouldn't you know that Zach owns 22 JWB properties? So Zach and your wonderful wife, Beth, I mean, it is incredible to have you as clients, your trust. I didn't verify this before, but I think you may own the most properties of any client of JWB. If it's not the most, it's right. It's very close. You're up to 22 properties. You've taken the market dynamics over the last 3 years, and you've used everything that we talk about to take advantage of the market and the market signals. You started with the team. You bought into the team and the market and all that good stuff. Properties have been easy for you to choose because you knocked out the team and the market. And you look beyond what's going on just in real estate. And you said, how can I pull money from a different asset class to put it here? Because right now, this is a really good time for that. So look at your properties here. We've got 22 properties. The first slide is the ones that I wanted to point out. Those first 1, 2, 3, 4, 5, 6 properties, 7 properties, you bought right off the bat in 2019, okay? It takes a lot of trust for you to invest in 7 properties the first time with a new provider, and you live in Washington. Talk to me about why that made sense for you to invest in 7 right off the bat.
As I mentioned, right, the property is secondary for us, right? It was about the team. So trusting the team, understanding JWB's perspective and their model really provided us, I talk about the fact that the one thing I would describe JWB is trustworthy, right? And I think if you, like anything else, I mean, I'm not going to be here to say that I'm an expert investor at all. Even today, 3 years later, I still learn every day about what to do and how to do it. But one thing I learned is that when I was in the stock market, the traditional investing, I was not making this type of returns on investments. So it was easy for me to make the leap. And sometimes I think a lot of folks are afraid to make the leap. A lot of the investors that I talked to, they were afraid to make the leap. And for us, it was about getting to that end game, right? The end time I talked about is a desired cash flow, what we looked at. And the first thing we did, and I heard Pablo talk about this yesterday in his podcast, was that we wanted to maximize our conventional loan opportunities with Fannie Mae, right? We've had some other properties. So I had, in my world, both of us still had around 7 or 8 opportunities, mortgage available. So we immediately cashed out on stock funds, stock options, some of our stocks as well, and we invested right away. And obviously, you see, we invested immediately into new construction because it's the eye candy at the time, right? No other property management company out there that we talked to offered this type of portfolio. And so we jumped in, right? It's no different than if you were offered Tesla or Amazon at the onset. I was on the onset of Boeing when it was $10 a share, for example, when I first worked for them.
Right.
And so you get on, and it's because you believe in the structure and the business model of the company and the team, and it's easy to buy into this. And so buying 7, it was not about how many, it was about who I was buying it from. That was more important, and how they would help me manage this going forward. Because passive incomes mean that I rarely want to be involved, but I still want to be the decision maker, right?
It's amazing, right? Well, that's awesome. So there's just half of Zach's portfolio. This is the other half. If you counted all that up, that's 22 properties. And most of them were purchased with financing. He bought some with cash. All right, let's go to the next slide here, because what I'm showing everybody here and Zach for the first time is a full picture of your 5 profit centers here. We're looking beyond just cash flow and tax savings and principal pay down. And we're taking a look at the big picture, including home price appreciation. We're also going to talk a little bit about inflation hedging. And I'm going to read some of these numbers out for you that are just staggering. And if you're wondering why, even though this hasn't been perfect for Zach and he has a property that has earned a negative return on investment, if you're wondering why he's all smiles and has said so many just wonderful things today, it's because this big picture is what he pays attention to, right? Since 2019, Zach, you've earned $210,000 in net rental income. You have earned $19,344 in tax savings. That's money that you didn't have to spend, even though you earned all of this wonderful income because of the tax advantages in rental properties. You have paid down, no, let me say that over again. Your residents have paid down $83,000 in principal. That's like literally somebody else that you don't know paying your loan off for you. Wouldn't we all love more people like that?
Oh, yeah.
Well, they're called residents. That's what they're called. That's why, one reason why we love them so much. And then here is the big thing that not enough investors understand how to prepare for and analyze. And it's the biggest percentage of their overall return. It is none other than home price appreciation. Zach, $1,244,000 in home price appreciation for your portfolio of 22 properties, brother. Congratulations.
Yeah, I can't ask for anything better, right? I can't ask for anything better. I mean, I didn't know about this. So for those of you who are on the show, I mean, all my partners in crime on the chat there, this is surprising to me because I don't look at this, right? Because it's not time for me to look at this, but I've never seen it presented to me this way. So I'm glad that you took all the time since Monday, GC, to put this all together. well worth it. I think if we do come down to the meetup, I think you owe me a drink down there.
I think so. Or maybe you owe me a drink. I don't know. We'll owe each other drinks.
There you go. This is awesome. I mean, who would think that we started exactly 3 years ago and to be at this point? This is the vision that you got to believe in. When GC talks about all of this thing, Greg, when you talk about this, here's the proof. When you talk about validation and actual data, the performer will tell you one thing, right? When you purchase it. I looked at performers in 2019, but this is not what I expected, right? This is better than what I expected relative to actual returns. So actual data is what validates how truly successful JWB can be for their clients. So thank you guys. Greg and you and your team. Again, I couldn't have done this without you guys. So
well, it all starts with trust, and it's hard to give your trust to another provider, especially, we didn't have a substantial relationship before this. It wasn't like we were friends or neighbors or whatnot. You put your trust and your faith in our team, and we love it. So yeah, man. So, putting all of this in perspective for those who are on the podcast who can't see what's going on here, when you take all of these profit centers and you look at what Zach asked us to perform at as a portfolio for all 22 of his properties, he expected a 6.5% return on investment on his money. Because of our vertically integrated approach and being here in a growth market like Jacksonville and our property management services, we've returned 22.7% per year for Zach's money. That's Zach's money working overtime for him and doing so many great things for him and for his family.
Better take a picture of this and tell Beth so she believes.
Yeah, absolutely. Well, is she going to come down next Friday too? Because we can all take a look at it.
If we come down, both of us will be here, of course.
Love it. I hope so. I'm definitely buying her a drink. You might have to buy me a drink. I'm going to buy her a drink. Oh, brother, this is awesome. Well, here's the last thing is I want people to understand that cash flow is important, but it is one of 5 profit centers. Here, if you break down the total returns for Zach, and I'm going to start to do this for all of our clients, you're going to see how this works. The biggest percent of your total returns is not rental income. The biggest percent of your total returns when you invest for a full market cycle is home price appreciation. 78% of Zach's performance has come from home price appreciation. And here's the kicker. even if home prices hadn't appreciated the way they have in the last 2 years, this would still be the largest part of the pie for Zach. And that's why you have to choose the right operator and the right market and be like Zach.
Man, that's impressive to see.
Zach is like the epitome that like, I believe that nice guys can win. I believe that like nice guys and nice women and people who care about others, I believe they win. And that's what I think of when I look at Zach, right?
Yeah.
He's winning and he does it in such a humble, just gracious, just friend approach. And our relationship's very special. And I appreciate the journey we've been on. And I know we're going to be on it for many, many, many years in the future. And I'm excited, buddy. Thank you.
You're very welcome. You know, Matt, it's been a journey that's been acceptable. And for me, I think the end game is just having a good time and building a relationship and networking. You know, you talked about networking yesterday. Networking is huge. And I think that I see two good friends now, right, that we can talk to and chat at any time. And that we can look at each other and be able to depend on each other when we need to in times of decision making, in times of forks in the road. We talked about that as well. But I think to end today, as you said, Pablo, I do have some things there's 5 things I want to tell people that's on the call today, is 5 lessons from me. Number 1 is, I said this before, invest in yourself, right? The more you learn, the more you earn. Second thing is case, copy and steal everything. Separation really is in the preparation. The third thing is success breeds success. Successful people surround themselves with successful people, right? Number 4, execute, execute, execute. Just do it. Avoid analysis paralysis. And then if you do all 4 of those things, I promise you, as you saw with my portfolio today, beer in the hand with toes in the sand will happen. So I'm hoping to do that next week in Jacksonville with you too. I appreciate everything. Ahuiho, mahalo nui loa to everyone. And hope I'll talk to you guys all soon.
Amazing, man.